Money, cards, coins, and cash. Regardless of the denomination, it's bound to make a splash. But whether it's a flash in the pan or something that sticks is up to you. And in a world with so many options, it's hard to identify what to do. So with so many distractions and people and the media telling us how to spend, I'm giving you the baseline so your financial wealth extends. Starting now. Hey yo! What's goody everybody? Today's topic, money management. Money is a tool to help propel us on our mission, but time and time again the world deters us from our vision. With the media telling us this and other people telling us that, we're silencing them all so we can get back on track. So today's focus is how to establish our financial wealth to become our best selves. So now that we're live, let's dive. Point number one, priorities dictate spend. As John Hope Bryan says, poor people talk about other people, wealthy people talk about their ideas. What you talk about will flow into how you spend. So to maximize our finances, we must put a stop to this trend. In a world where the disparity of riches is extremely vast, we must understand why that's the case and the contrast. So what matters most? You. The first point is you. Because if you're thinking one thing, that's what your money will do. I'm hungry, I'm thirsty, I'm stressed, or I need a nap. With a short-sighted view, you'll waste money on what you don't have to have. Fast food, Coca juice, cigarettes, or coffee from Starbucks. And even though we know they're all unhealthy, we pay a premium for this stuff. So how about instead of falling for the advertisement of convenience, we expand our view of reason so we come to the right decision like a genius. Groceries, water, quitter gum, and a coffee maker, or an apple. All these options last more than once, and we remove financial shackles. More energy, hydration, cheaper alternatives, or ridding addictions. Just by changing our small choices, we have access funds that we once thought was fiction. So next is people, social media, our friends, and public perception. In a world predicated on sight, so many people will tell you exactly what you should buy or wear. And the issue we run into is falling for this trap when we really shouldn't care. Designer brands, premium cars, restaurants, and trends. The issue isn't if we want it, it's spending when we don't comprehend. When we waste money for the validation of others, we lose our own individuality. And since we're so focused on them, our minds become our financial fatality. The purpose of paying a premium is to get better quality, not a label. And it's very rare that better quality translates to 10 times more. That's just financially unstable. So instead of worrying about Louis Vuitton, Versace, Cybertrucks, or Ruth Chris, we should only focus on the quality of our products and what we like, not this. Macy's, Toyota, steakhouses, and Team Jordans, these options offer the same quality and oftentimes in greater portions. And this doesn't even mention off-price retailers, because at Ross, TJ's, and Marshalls, you can get a premium option at a price that's even better. So then lastly is environment. Home, school, neighborhood, and advertisements. This is the one we can't change because we're born into our environment. If your situation is unideal, you definitely have a larger mountain to climb. But just because others around you are doing it doesn't mean you have to let it define. Broken households, poor school districts, and liquor and smoke shops on every corner. With everything around us being beaten down, it becomes hard not to be a scorner. So if this situation describes you, it's very possible to come out on top. The goal is to focus on you and to nourish your mind like a crop. Learn from the good and the bad, and research online what they're teaching in school. And whenever you walk past those corner stores, use what you see inside and out as your fuel. There are so many examples of successful people from these situations. So go online and research their stories to guide you to your next destination. So now that we've gone over our priorities and have identified what matters, next we'll go over credit scores and why it's so much more than chatter. Point number two, credit score equals representation. 300 to 850. The higher the number, greater score. And all those attributed to loans, it actually means so much more. A credit score represents your financial ability, but it also reflects in the mirror. Because if you can't match what you currently have, having more just makes it even clearer. 80% of NFL players go broke 2 years after leaving, and 60% of the NBA after 5. And the odds are likely even worse for lottery winners who believe they'll thrive. If you can't handle $100, you can't handle 1,000 or a million. Because although you're temporarily in the 1%, you'll end up being a poor civilian. This right here is what credit score means. It's not about your financial worth, it's about your ability. That's why credit scores of 700 plus get a better interest rate than 700 and below. Because when a bank looks up your FICO, they're assessing if you're liable to skip out on a payment that you're owed. Higher score, lower rate, because they feel safe that you'll pay. Lower score, higher rate, because they think you'll take longer or you'll back out of what you say. So, how do you raise your credit scores? Early, limit, and save. Pay expenses off early. You must pay above the minimum. Because if you're paying the least amount possible, you're stretching payments and paying more in the interim. The easiest way to understand this is to put ourselves in the lender's shoes. Because when we lend money to a friend, would we rather they pay today or string us along and they can do whatever they want to do? That's the mindset we have, so we must understand that the banks feel the same way too. So next is limit loans. Fewer loans equals fewer expenses, which equals more likely to pay. And if you have fewer loans, you'll likely pay them off sooner, so there's no delay. So for example, let's say I owe Billy, Bob, and Joe $1,000 each. Let's say it takes a year to pay them all off together. But if I borrow only $1,000 from one person at a time, each individual is paid in 4 months. That's how you make your credit score much better. I need the same amount of money, but pay each person much faster. So next time I ask for a loan, I've established the credibility that this guy's not a financial disaster. So lastly is save. Simply save. The more assets you own, the more valuable you are today. The greater your assets, the greater your flexibility. Because the longer you hold wealth, the greater your credibility. It's similar to a resume. If I have a job and 2 candidates, one just graduated high school, while the other graduated college with honors and 3 years of experience, it would be awfully hard for me not to hire the individual on paper that appears very serious. Lenders and banks have that same mentality. So pay off your debts and save your money so your credibility becomes formality. So now that we understand the importance and significance of a credit score, I'll go over the most important thing to ensure our finances grow forevermore. Point number 3, own, don't advertise. Own. Don't advertise, own. Because if you're renting something from someone else, you're just paying them more for something you could just own. It's impossible to establish stable financial wealth when you're constantly renting something from someone or someone else. Reason number 1 is stability. Renting decreases stability because when you're renting something expensive, your investment has no flexibility. If you're renting an apartment, a house, or even leasing a car, all you're doing is advertising the owner's product and assigning it a star. This space is great. Love the location. There's an issue. The owner's dependable. Meanwhile, you're oblivious to your money dwindling and you're 100% expendable. Your rent 100% costs much more than your lease or mortgage for your space. And while you're paying that insane amount, you can't recoup any of the money you've put into that place. Now, if you own, you can sell it to make a return on your investment. And if you live there, you'll be paying the monthly amount that's actually expected. And if the market around you grows, your mortgage remains the same. So you'll never have to worry about your monthly rent putting you to shame. And just imagine how much excess money you would have if you paid off your house. So instead of $1,000, $2,000, $3,000 going to the bank, you get to pocket it all now, which opens up the door to increase charitability. We can give more to those in need. Because with excess funds, we can financially support more to succeed, increase our charitability, our tithes, or support someone that needs help. By managing our finances, we can provide for more than just ourselves. Because at the end of the day, money's just money. We can't take it when we go. So now that we're stable, we can focus on helping others grow. So then lastly is flexibility. We're stable and we're giving. Since we cover both fronts, let's enjoy some while we're living. If you haven't already, make sure you save 6 months to a year's worth of expenses. Doing so will enable you to pursue financial endeavors while keeping up your defenses. Invest in stocks, real estate, college funds, or vacation. Since you're well versed on your finances, you'll make smart decisions with your information. So that's money management in a nutshell. Maximize what you can do. That way you can do what you want and focus on what matters to you. If you enjoyed this video, please hit the like button. If you'd like to see more, please feel free to check out the channel and subscribe because there's more in store. From one witness to another, you are special. Hook out.